Now, moving across to the realized cap. Now, you'll hear me talk about this metric all the time because it really is a foundational tool. We have a whole video and a report, which I'd strongly recommend anybody getting into the world of on-chain analysis. That report and video really tries to explore what this metric is and why it is so important. Most of the powerful tools we do for tracking markets, capital inflows, profit and loss, sentiment, investor positioning, they are either a derivative or a component that builds up into the realized cap. Now, I generally look at the realized cap. I get asked this question quite often. How do we know when capital inflows or outflows are coming in or out of Bitcoin? And I will normally actually point them to the realized cap. It's a little bit of an abstract concept, but it's essentially the on-chain market cap. It values every coin at the price when it last moved, which means Satoshi's million coins are worth $0 because they haven't moved at a real price ever. And the coin that was spent yesterday is worth, well, $43,000 or 38, whatever the price happened to be. Now, why does it represent capital inflows? We can see we actually have a strong uptrend in play on the realized cap. The blue curve in the background is actually the drawdown of this metric from its all-time high. And again, coming back to that concept of duration, how long does it take the realized cap to dip and actually fully recover? You can see we are significantly rallying. We've got an acceleration since October of capital inflows. So why do I say that an uptrend in the realized cap is capital inflows? Well, you can see that it normally trades much higher during bull markets, 2021, 2018. If you zoom back, this is obviously not in log scale. If you were to zoom back, you would see that same very, very vertical jump in every previous cycle. And then it goes plateau to downwards. The reason is that coins bought in the previous bear cycle at 3,000, 6,000, 8,000, 12,000 are being revalued higher as they take profits. So someone buys at 10,000, sells at 50,000. Someone has to come in with that $40,000 difference times the coin volume. So it represents a higher amount of capital inflow. When profits are taking, one guy's profit is another guy's brand new cost basis. So we're looking at new capital coming in, which raises the realized cap and shows that you actually have new money coming in. The other way to think about it is because the realized cap saves every coin at the price when it last moved, it's kind of capturing the amount of capital invested in Bitcoin. Now, it's not going to pick up things that are on exchanges and trades. And the reason why I think that's actually still a very relevant perspective is because even though coins do trade on futures and they do trade on spot exchanges, and these are off the chain, they're off book, at the same time, they are also one click away from a buy and a sell. So in a way, all of that volume is it creates the price action. But there is a very big difference when someone withdraws their coins. And this applies to ETFs and custody as well. When institutions take custody and their coins go into some kind of multi-party custody solution, they are also having to transact on change and change actual private key ownership, usually to some kind of multi-sig. So we are going to be capturing ETF flows in this metric. We are going to be capturing institutional custody because they have to transact and move to someone else's private key, even if that private key is a multi-sig wallet held by the client, maybe a custody provider, however it's set up. Those coins still have to move on chain. So in that way, the realized cap really has been this long-standing metric. It provides us with a view on capital inflows, which you can see are accelerating as of October. It's a really good metric to just understand true capital flows in and out of Bitcoin.